From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 8th, 2017. I hope you had a great weekend, ready to get started trading this week. In today's video, I'm going to do a general overview of each U.S. currency pair in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will look for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies in all trade setups. We'll get started here on the USDCHF. We're looking at the daily time frame with the French elections over the weekend. We have seen a turnaround on both the franc and the euro. Late last week, we saw them both moving strong. Here on the dollar franc moving lower, euro dollar moving higher, settling down here into support into the mid 9800s late last week into Friday, and now the rebound back higher here for the dollar franc, going all the way back into the low to mid 99s. The question, of course, is this going to be a temporary push higher, or is it going to be a longer term sustained push higher? Well, I think that question won't be answered until we get through the 99.60 level. Let me zoom in a little bit here on the chart, and you can see this significant area of resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9 days where it found resistance at the top of that black box and the blue shaded area between 99.45 and 60. I think our question won't be answered unless we break above here. Will we see the turnaround higher? It needs to break above that blue shaded area. If it can do that, that being a barrier of resistance, then I think we look for further movement higher, all the way back up, parity or higher. That's the pink shaded area, or just above the parity levels, that pink shaded area. On the other side, if it continues to find resistance, if this is just a temporary push higher into the mid 99s, we could be looking for a fall back down to the orange shader. So if you're a buyer, let's talk about buying this first, because we have seen a significant push higher on the news from the weekend. If you're a buyer, I think you need to wait for one of two things: either a dip back down to support, that would be the orange shaded area here down towards the 9900 level. That would also challenge back towards the top side of the black trend line. That becomes a better buy, lower risk and higher reward. The second opportunity to buy this week would be a push finally above this 99.50-60 level, the blue shaded area. So if you're a buyer, you need a dip to support or break through this barrier of resistance for the dollar franc. Now on the other side, if you think, well, maybe this is a temporary push higher and maybe it's a better opportunity to go short, then you're watching for evidence of that. You're looking for clues to resistance first here into the blue zone, and then evidence of reversal, price action, and indicators that would tell you that it's going to reverse and go back down. So this blue zone is a critical decision point. It's a bounce or break scenario. It's either going to bounce off, go back down, for reversal to go back down, or it's going to break through, continue the bullish momentum that we've started so far at the beginning of this week, and continue higher back up to the pink shade area. So we'll watch this blue zone for key opportunities. Down to the 4-hour time frame won't change any of that. We can see the significant rise, of course. We know that it needs to either go back down towards this black trend line, towards the bottom of the orange shaded area, or towards the orange shaded area before it becomes a lower risk, higher reward opportunity. You know, your risk reward right now, risk is still under the orange zone. Potential profit target is being capped at the blue zone. So your risk reward is not balanced in your favor unless it breaks through that barrier of resistance, the blue shaded area, here for the dollar franc. Just the opposite is the euro dollar. Of course, we see a significant pull back down here for this currency pair. Last Friday, we saw the final open and close above the blue zone. That was a key point that we were talking about on Friday, above 1.096550, that blue shaded area at the top. We saw a lot of resistance there, and it finally broke through it. But with the French election news, we see the significant pullback down here. The market selling off, starting way up here at the top of that candle, which was opening up right around the 1.1020 or so level. You can see that there, 1.1019, and now we're down, closing right now into the low 1.0900. So significant sell-off. Bearish engulfing candle, absolutely, but we have to wait for this candle to close. We don't know what this candle will look like by the end of the day today. I'm talking about today's daily candle. So definitely watching for further evidence of pullback, but we wanted to get underneath this blue zone. Look at all that resistance. 1, 2, 3, 4, 5, 6, 7, 8 days finding resistance underneath the 1.0935 level. We need it to get underneath that before we have confidence in the continuation lower, at minimum back to the trend line, the orange shaded area, or lower if it can break through through there. So we definitely want to keep that in mind. We also want to remember this gap sitting down here from 2 weekends ago. It's interesting still sitting out there, but we need the breakdown 0.935 or so before we can have confidence in this 4-hour time frame. Again, the significant sell-off is there, but I think it's the breakdown of the blue zone that gives us further evidence that it's going to continue this bearish momentum. I definitely would like to sell this, but I definitely want some further evidence that it's a real deal breakout, not just a false move lower here for the euro dollar. Let's move it on over to the GBP USD. We saw the breakout last week. We've been studying this pattern for the past few weeks. In fact, I'm just going to go ahead and zoom it in on here. These two black boxes, we've been studying this pattern for the past couple of weeks, seeing congestion between the yellow and the orange zone, support. In fact, we bought it down here at the bottom of the orange zone a couple of weeks ago. We saw last week similar situation between the yellow and the green zone. So the question of the week will be, are we going to see a similar situation here between the green and the purple zone where it just bounces around? Well, one of two things is going to happen. It's either going to do, well, I suppose one of three things is going to happen. It's either going to continue to find resistance here and support at the green zone and bounce around like it did the past 2 weeks, or eventually we look for the breakout above the purple zone for a continuation of the trend, or below the green zone for some intraday or short-term reversal here for this pair. So for the time being, until we get some significant catalyst to break it out of this black box here, I think we could be looking for opportunities. Green zone for buying, just like we could have at the yellow and the orange shaded area. Watch for support and reversal opportunities from the green shaded area, 29.50.20. A breakdown of that green zone is the risk there. We likely look for the continuation lower. 4-hour time frame doesn't give us any real hints here. We do see a pretty strong bearish move, but we saw that several times down into the orange and the yellow shaded area, where it took a strong move into the orange zone or the yellow zone and then turned around and went back up. So just because it's going down doesn't mean it's going to continue. I think if you're looking to sell off on a dollar or pound dollar, you're looking for the breakdown under the green zone. That changes the entire pattern here that we've been seeing. This pattern here where it's been moving higher, the change of that would be the breakdown of the green zone. So as long as it's above the green zone, potential opportunities to go long on support and reversal clues to go back up. Selling the purple zone may be an opportunity to look for a reversal to go back down, but the risk there is that it breaks out and goes in the direction of the current trend. So purple and blue zone will be your major areas of decision. If you're a buyer, you're watching for support into the green zone and an opportunity to go back up. If you're a seller, a break of the green zone turns lower here for the pound dollar. Moving on over to the USDCAD. Take a look at this pair. Long-term uptrend. Of course, we correlated a lot of that with the fall of oil over the past couple of weeks. The fall of oil giving the Uscad a significant move higher. Last Friday, we saw the first real significant move lower, the first chink in the armor, if you will, as it was started moving higher and then suddenly came back down to the blue shaded area on news on Friday. Now we're finding some support right above the 36.50 level and into the blue shaded area. If you're a buyer, the blue zone's your area to look for that. You want lower risk and higher reward. Right now, your risk is that it breaks the blue zone. So your risk stop loss would be underneath the blue shaded area, just in case it breaks out underneath there if you're looking for the buy scenario. If you're looking for a short scenario, I think it has to break the blue zone or potentially go all the way back up to the orange zone. So sellers are lying in wait. They're waiting for it to either go back up to the orange zone or break through the blue zone. Buyers are looking for opportunities here into the 36.50.80 level, the blue shaded area today, for the return of the upside for the Uscad. Moving on over to the US yen. This one not quite as easy looking as some of the other pairs. Of course, we saw the open higher, open very close to the 100 period moving average into the low 113s, but not quite all the way there, but opening a little bit higher, coming back down. This purple zone, look at how the market's just been stuck in here for the past 3 days between 1270 and 1245. Just been stuck in here. And here we are again, even on the open, pulling right back down here into this purple zone. So for this week, I think we watch this purple shaded area at the very top of the chart. I think even here on the daily, it's going to give us most confidence if it opens and closes above it or opens and closes back below it. I think we could be, in fact, underneath 1245 looking for evidence of reversal. Bearish engulfing candle. If today closes back underneath 1245, that would be a very interesting setup there for the dollar yen, but of course it's not down there yet, not even underneath. So a breakout above or below this purple zone by the end of day today may give us a better clue of what the next move is for the US yen. Taking it on over to the AUD/USD, we are into significant support down here. The blue shaded area, 73.95, 73.75. We noted taking Fibonacci from the bottom of the red trend line to the top of the red trend line. We did this in the trade room last week. We noted here that the 0.618 Fibonacci retracement level of the red trend is sitting right here in the middle of our blue shaded area. 73.85 is that 618 fib, 73.95, 75 is the blue zone. So right now we are at significant support. 618 fib. You see back here where the blue circle is. We've seen here support before, so definitely significant support. I don't think you'd go short unless it breaks through that blue shaded area. I think the blue zone is a pretty decent area to watch for some support and probably a potential reversal point to go back up. We saw it back here, and we could be looking for that back here on the right hand side. As long as it's above the 618, I think that might be something you look for. Support and reversal clues, takes it back up to the orange shaded area and the black trend line. Of course, once it reaches the black trend line, we could be looking for opportunities to go short again. But if you're a seller, you'll always want to sell at a higher price. So I think selling happens back up here at the orange zone, mid 74s, or the breakdown of that support, the 618 fib, underneath 73.75. So right now, if you're a seller, you're not selling this. It needs to go up or break through the support before you sell it. If you're a buyer, you're definitely watching for clues to support and reversal here from the blue zone. Something we started looking at on Friday is potential for the reversal pattern. You know, you look back up here to the left-hand side, and we studied this. Let me change that to a different color. Let's make it the blue trend line. I'm going to take this blue trend line here. We studied this pattern here where we saw the fall and the rise here, making a small head and shoulders, inverted head and shoulders pattern there where the two blue trend lines are. So the question is, are we seeing a very similar pattern down here where we see, excuse me just a moment, where we see the fall and making a lower low, and now we're making a bit of a higher low here. So similar situations. So I think as long as it stays above the blue zone, there's a greater potential for some intraday reversal, just like what we saw over here on the left side at the orange shaded area. So a bounce here sends it back to the orange zone. Now the risk in that reversal pattern is that it breaks down through the blue zone and invalidates it and continues lower. So definitely something to watch today. I've actually put a pending buy order right there at 73.95 to see if we can take advantage of a little bounce there and potentially a little bit of reversal back to the orange or maybe even the green shaded area. The risk, of course, is clear. The breakdown of the blue zone sends it back lower here for the Australian dollar. Moving on over to the NZD/USD, we're a little bit stuck in a little period of congestion or ranging, if you will, down there at the blue box. I think we need a breakout here of this little blue box that's down here at the bottom right. Right now, the yellow zone is holding as our resistance at 69.25.19. If it breaks the yellow zone, then we look for further movement higher. If it stays under the yellow zone, potential move lower. We do have significant news out of New Zealand this week, however. Down here, the green zone, that's our support clearly, 68.80, 68.55, and of course a breakdown there. Underneath the green zone, we look for further movement lower. So at least at this point, we're congested. We're ranging between the yellow and the green zone. A breakout will give us a stronger trending move here for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.